In this day and age, hydrogen is undoubtedly the most controversial energy topic that we have ever seen in the past decade. We have skeptics and we have those that are bullish on this technology, but the thing is that both sides often tend to raise a very good argument. And so as an investor in the stock market, it's difficult to understand which side of the coin might actually turn out to be true in the next decade. Well, I do have some very good news. In this video, I want to share a technology and a company who is on track to revolutionize the hydrogen industry forever with its very high power and efficiency fuel cell technology. Because look, there is no doubt in my mind that hydrogen companies will perform very well in the next decade. It's just about finding which companies will outperform the others and balance out the risk of going under. And I can guarantee you that this company I'm about to share in this video has a chance of being the most successful out of all these businesses with potentially the least risk. But as usual guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So to start things off, let's understand which company I'm talking about. The business in question is Bloom Energy, which is one of the most established and technologically advanced green hydrogen businesses in the entire world. This company went public back in 2019 and they're trading at a very attractive valuation given just how much technology has progressed. And most recently, the article that caught my attention was this one, where they mentioned that Bloom Energy could be a better investment than Plug Power, which is right now obviously touted as the leader in the green hydrogen business. But before we can address that, we need to understand what sets Bloom Energy's technology apart from the competition and what exactly is their business model strategy. So to address that, I'm going to bring in Bloom CEO KR to explain exactly that concept.
Let me spend a few minutes now on the unique and proprietary platform whose intellectual property is highly protected for us. The platform converts chemical energy to electrical energy directly. This is the fuel cell mode. The platform also converts electrical energy to chemical energy directly. This is the electrolyzer mode. Operated in either direction, we offer the best conversion efficiency in the marketplace, period. The flexibility of the inputs and outputs from our platform accommodates and enables us to tailor solutions for our customers. Our platform uses an architecture that is similar to the semiconductor industry. I'm waiting for that slide to switch, thank you. And what it does, this architecture, it emulates the semiconductor industry in its building blocks, but more importantly, it tries to adopt the successful cost down and learning curves associated with that. Look at what you're seeing. The fuel cells, the stacks, the server modules, the systems, the power center. For us, are analogs to the transistor, the integrated chip, the server blade, the rack, and the data center in the computer world.
That right there is why Bloom's technology won the S&P Global PATS Advancement Award back in December of 2021. And that's a big reason why I am extremely optimistic about this business in the future. You see, for those that still can't wrap their head around what exactly Bloom Energy does, essentially they sell these server racks that are fuel cell modules that can convert hydrogen gas or natural gas into electricity. These racks can be installed anywhere near an office or a warehouse, and they can provide you continuous electricity supply with absolutely no interruption and a cheaper cost than getting electricity from the grid. And why is that the case? Well, because unlike electric grids, natural gas supply underground is constant, and it is something that is available literally everywhere. The building you're sitting in right now is probably heated by a natural gas generator. And obviously we know that natural gas is much more sustainable than coal or oil, and when burnt, it doesn't give as much carbon emissions as does gasoline or diesel. And the thing is that when used with the fuel cell, there's actually zero emissions because fuel cells obviously convert natural gas into electricity with no combustion. Now, obviously, there is a carbon footprint of sourcing that natural gas, but that's where these fuel cells really come into play because they can also run on hydrogen or biogas. And because of this extremely durable and versatile platform, Bloom's technologies actually already commercialized on cruise ships through the MSC World Europa, which was a ship launched back in December of 2021. Although the fuel cells are not used for actual propulsion, they're used for providing auxiliary power to the ship through a 150 kilowatt Bloom fuel cell server. And because of the fact that there is absolutely no combustion, these guys are able to reduce their emissions by 60%, which is insane for a cruise ship. And keep in mind, this is just on one cruise ship. So now imagine over the next 5 to 10 years when there's actual regulation to reduce emissions on all the hundreds of cruise ships that are in the world, then whose technology are they going to probably use? It's most likely going to be Bloom's if they have the commercialization right in place. And the thing that sets Bloom's technology apart from the rest of companies like Plug Power or even Ballard Power Systems is that they're using a solid oxide fuel cell technology and not a PEM technology. Essentially, the difference is that solid oxides operate at a higher temperature, meaning that they are more efficient. Now, that obviously comes at a cost of developing more balance of power units to make the entire system work properly, but that is what Bloom's been working on for the past 20 years, especially given the fact that their current CEO and founder, KR, was a former NASA engineer, and he's one of the folks that launched one of the first fuel cells on a rocket. And the reality is that the energy consumption of Bloom's fuel cell technology is significantly lower than PEM, which means that for stationary applications, Bloom's technology is going to most likely dominate the market. And as we've all seen over the past couple of years, the demand for stable and cheap electricity has skyrocketed. We've already seen through what's happened at Hurricane Ian and all the natural disasters occurring in the US that the electric grid is extremely fragile. And as the demand for more sustainable sources increases, Bloom's technology demand will naturally go up as well, as we've already seen through the number of commercial and industrial customers that Bloom already has revenue from. And like KR said in the presentation, their technology can be reversed to not only act as a fuel cell, but also as an electrolyzer, meaning it can also generate hydrogen on demand using an electricity source. And this right here is what significantly accelerates the total addressable market of Bloom's technology when compared to all of its competitors. Because now if you can make green hydrogen competitively using a much more energy efficient technology, then you can fuel all the massive demands we've been seeing in the technology space for hydrogen fuel cell cars and obviously trucks from businesses like Nikola Motors. And not only that, you're also going to be satisfying the demands for all the steel and glass manufacturing businesses that rely on hydrogen for their manufacturing processes. And as the demand for more sustainable sources of hydrogen come into play, Bloom's technology is going to be at the forefront of efficiency and practicality. But obviously here, since we are investors and stock market fanatics, we need to also understand the financials of Bloom Energy stock to see if this is a good investment from a financial and economic perspective. And long story short, it is a very attractive opportunity to say the least. You see, the biggest reason for that is because Bloom's stock is trading at a price of sales right now of only $4. Basically, they do around $1 billion in annual revenue, yet the stock is trading at a valuation of only around $3.72 billion. If you compare that to a stock like Plug Power, this one is trading at a price of sales of 21, which is almost 7 times as high as Bloom. Meanwhile, even F-Cell Energy is trading at 13.26, whose technology is actually not even able to address the green hydrogen market over the next decade. These guys are simply stuck on natural gas. And no, it's not like Bloom Energy's revenue has stagnated over the past decade, which has caused its price to sales valuation to come down. They've still been growing at a very consistent rate between the 20 to 30% ranges at the very peak. And even though in the short term there have been some headwinds due to the supply chain problems, their gross profit has also been on a steady upwards trajectory. But by far the most crazy part is that their gross margin is actually positive if we're in a good quarter. On average, it sits anywhere between 15 to 20%, which you cannot say is the case for any other hydrogen stock, whether it be Nikola Motors or Plug Power. Now, obviously, Nikola is an early stage company, which is why their gross margin is negative. But Plug Power has been in business for 20 years, and their gross margin is nowhere near as stable as Bloom Energy's, which really goes to show that not only is Bloom selling an amazing product, which is growing revenues, but they're also able to keep their costs under control and have a team in place to manage all the macroeconomic headwinds and tailwinds. And as you can see, at IPO in 2018, the stock fell from around $34 all the way to $3 before skyrocketing back to almost $35. And this, I think, in my opinion, goes to show exactly how irrational the stock market can be in the short term. And simply because of the fact that this company has been in business for so long and they already have a multi-billion-dollar backlog of orders, not only in the US, but also in Asia, makes me think this is probably also one of the lowest risk hydrogen stocks you can buy in the market today, because I obviously understand that investors are very skeptical and wary of so many hydrogen startups in the market. And it also pays to have a management team that is very active in judging the macroeconomic situation developing right underneath their feet. And that's actually a big reason why these guys raised money in August of this year, when the stock was actually going up by over 50% in the span of a month. These guys do have more debt than they would like to have. And so because of that, they saw the opportunity and raised around $388 million in a span of a week, which is significant for a company that does around $1 billion in revenue. And this will help pay off some of their debt and again further de-risk the investment. But obviously at the end of the day, that is just my opinion. So let me know your thoughts down in the comment section below.